Hello guys, I'm Kelvin from Round Search, and last week I have done a very bad mistake and causing me a lot of profit that is gone. Okay, so end up in the negative and a losing weight for last week. I want to share it out to every one of you, and so that everyone would know what are the mistakes that you will face as a day trader. So let's take a look into it. So we can look into the trades that I've done last week. So you can see 7 trades, 3 trades are loss and 4 trades are profit. You can see that the probability is still more than 50%, but overall I'm still losing about 800 Hong Kong dollar. So what is the problem here is that the profitability is not able to cover the losing trades. So you can see here we have a profit about like 3006 and then 2006 and then here 400. So here I have the losses about 3006. So the main mistake here, which I have done the same mistake twice in a week, which is unacceptable for myself, is on Monday I'm losing 2,460 from there, and then on Thursday I'm losing 3,000 over Hong Kong dollar. Every one of you will know that I always use the benchmark of yesterday or the previous day aftermarket Hang Seng Index futures price movement, the volatility or the price range, to gauge how far the price will go. So my strategies over here is actually working, but the problem is that mainly the mistake that I've done in the last week is my own emotion and also overconfidence, and of course not actually reacting to the market. So from here you can see my strategy here is before 10 or maybe after 10 the price is still not hitting the price range of yesterday future price movement, then that will actually have a continuation of price fall. So I didn't actually look into that. I didn't accept that. I continue to go in for a bull contract, and that's where I have the losses until a point that I find that okay, cannot right now, so I have to do a cut loss. So after that, on Tuesday I learned my lesson. I tell myself, okay, I can't do this because I have my goal to achieve. Same thing over here. The price of the previous day fluctuation is about like 214, around like 10 a.m. Doesn't touch the 214 yet. So that's where I go into a bear contract. So after I go into a bear contract, later on I find that okay, maybe this is just a short-term rebound. But then I find out that is the volume when it has the rebound, it doesn't really have like really high volume from there. So that's why I think like something is not right. So when they have this candle one shot shoot up, that's where I do my cut loss and enter into a bull contract, and that's where I make my profit. Okay, when the price hit the price range and then hits the volume, okay, everything sets in to ask me to do a take profit, and that's how I make a profit of 3006. So after that day I got a bit of more confidence, and that's where the worst thing I always tell every one of you, try not to set your own expectation into any of your trades. So one thing is we always only look into the goal, we want to make 20,000, so we have that kind of mindset thinking that every day I want to make profit. But the problem is if let's say you want to make profit every day, we have to react to the market. On the Wednesday, I start to think like, okay, I cannot just focus on my goal. I cannot just focus on how much I want to make. I need to react to the market. So I did well on Wednesday, which I started to go in for a bear contract, which is at this point over here, I enter into a bear contract. Why I enter into a bear contract over here is because this one over here is trading near the price range. So I decided to enter, but I enter about 200,000 of bear contract. So that's where the price actually starts to go down. Then okay, everything sets in, I'm okay with that. But suddenly there's a price push up. But I did not do any cut loss from that. The reason is because I always say the faster you go up, the faster you will fall. Right? So that's where I hold on to my position, and of course my entry is over here. So when the price move up to this level, is not that much of losses, so it doesn't affect my emotion that much. And plus my entry over here is only 200,000 units. So 200,000 units, I can still bear that kind of losses emotionally. So I wait and wait until the point over here it shows that okay, right now it shows at the price peak and the volume, everything kicks in, and it's also trading very near to the benchmark, the price range. So that's where I decided to enter another 200,000 bear contract into it. So that's why I enter. After I enter into it, then it takes a very long time, okay, for the price to have a reversal, and it finally sets in after the lunchtime, around after 1 o'clock. So that's where we go for an exit at this point, okay, around this area. Although it goes back down a little bit, but we quickly take the profit here first, okay, because this is where it shows there will be a reversal. And end up, yes, it has a reversal. It was a happy day, okay, continuously 2 days, okay, making 2,000 plus of Hong Kong dollar. Finally, it sets into my plan. So I started to think like, okay, since every day I'm entering into each trade is about 400,000 units, so why not I can't find the best point to enter one shot 400,000 units, so I can make more profit out from it. That is where the mistake actually starts to come in on Thursday. So on Thursday, what happened was the 388 price range of yesterday futures price range. So I'm expecting it to have this kind of a price movement. But then at that point there, I see that there's a fast price up and then all these things. So I didn't follow the exact of the strategies. So I enter into a bear contract. That's the worst case. And I enter 400,000 units in one shot. And looking at the price movement up and down, that's a lot to me. Because if let's say you just move up like 5 ticks, then I'm losing 2,000 Hong Kong dollar. That's a lot. At this point, when the price move up to this level, which my trading strategy is that at 10 o'clock, the price doesn't hit the price range, then the price will continue to move up higher. But I ignore that. That's the worst thing, the mistake that I've done. So 2 mistakes over here. First one is I enter too many lots at one time, and then I ignore my own trading strategies. The reason is because I got blinded with my own target. Every day I want to make this much. And then that's where the things reverse. I lose about 3,006. So I find that, okay, there's no point for me to continue to hold on to this. So I do the cut loss, having a loss of 3,006. Right? So that is a very bad decision. So 2 mistakes over here, entering too many units of contracts at one time, and then also ignoring my own trading plan. That's where I got really tired of it, because whatever profit that I've made previously is all gone. But life still go on. I look back into it, I find my own mistakes, so I realized it on the next day. On Friday, I started to do my trades according to my plan. So same thing on the futures contract aftermarket, the price range is about 237 points. So at 10 a.m., around somewhere around here, the price is not touching the 237 price range yet. So that's where I start to know like continuation of price down. So that's where I started to go into a bear contract, 200,000 units only. So the price went down and then the price moved up fast again. That's where I know that, okay, this price markup is just a very short term. So I enter again at this point for another 200 units, so total 400,000 units of bear contract. So I continue to hold, and then I see that at this high side over here, it doesn't seem any sign that they want a continuation of price markup. Until the end of the day, we can see the price is somewhere around here, but because the range of my entry is here, the first one is around this area, and then this one is around this area. So when the price goes down to here, I can only pick up like maybe 2 ticks of profit or maybe 1 tick of profit. And on Friday, the price movement is very different. They always have a gap up every 5 minutes and then press it back down. Mark up, press it back down. You will always see this during about like 29 of every month. 29 of every month, they will try to gap down and push it back up, gap down and push it back up. So if let's say they gap down and push it back up, is always where they are trying to maintain the price. They don't allow the price to go down lower. So they might be doing some calculation, or maybe for the Hang Seng Index, okay, you average out and things, stuff like that. Then after that, I took my profit, I think somewhere around here, average out about 1 tick of profit, so make about 400 Hong Kong dollar. Overall, last week, we are losing about 800 Hong Kong dollar. So that's not a good trade last week. But most importantly is we need to learn from our mistake. These losses over here is the tuition fee. So that's where I learned from it. So I make the mistake on Thursday, and then I quickly adjust myself back on track of my trading strategies. So this is very important here for everyday traders who wants to be consistent and also profitable in the market. So let's summarize. What are the mistakes that I've made over here is, you can see most of the time, Monday or maybe on Thursday, the mistake that I've made, that I'm putting my own expectation, giving myself some pressure, telling myself like, okay, I need to make this much of money. So it actually blind off my ability to analyze the price movement. That's why it is important for every day trader to have a very relaxed and chill kind of mindset when you are doing day trade, so that you can follow the market much more better, because the market is not a place to prove ourselves, or it doesn't move according to our expectations. So everything is we need to react to the market. That is the very important thing. And also, a lot of traders always like to look into probability. A lot of people like to ask me, how many percent is your probability? I have a probability that is more than 50%, but I still lose money in the market. Why? Because the profitability is not good. So the important thing to judge whether you have a good trading skill is about profitability. It's not about the probability. You can go up to like maybe 9 out of 10 trades you are making profit. Each trade you are making $100, but with one trade you are losing 1,000. Basically, you are not having any profits from that. This is why there's a lot of investors or traders, they got blinded with how many times they make profit. But at the end of the day, when they look back into their account, they are not making any profit, because the losses, they don't count. Or even they hold on to the losses. That's why haven't liquidized yet, haven't sell yet, haven't closed the position yet. That's why they don't consider that as a losses. So it doesn't work that way, because at the end of the day, we still need to look back into profitability. After this week of mistake that I've made, all right, I have to remind myself not to repeat the same mistake again, because I already repeat twice of my mistake. If I repeat the third time, it's not acceptable. Let's look forward for the next week of the trade. So if you want to find out my performance from here, and you want to learn from my mistake and what are the things that I've done that can make consistent profit, and what you might face, how you can solve the problem when you are doing tradings, including the mindset, emotion, and also trading strategies, subscribe to our YouTube channel, alright, and also share this out to your friends who wants to do day trades together. Thank you very much. I'll see you guys next week. Bye-bye.